So welcome to the SBW's First Time Homebuyer Seminar. Our Savings Bank of Walpole mortgage lending team is Sarah Rosley, Christine Greenwood-Smart, and myself, Samantha Monson. I'm the newest member of the team. However, Sarah and Christine have combined roughly 10 years experience in the industry. They're the ones that are going to be facilitating the presentation for you this evening. Christine, if you're ready, you might need to unmute yourself.
That would help, wouldn't it? Thank you, Samantha. So welcome, everybody, and we appreciate you taking the time to come this evening to learn more about the mortgage, obtaining a mortgage as a first-time home buyer. So where do you begin? Well, buying a home really is a big decision, and that's going to impact your finances for many years. It's wise to sit down and create a budget, and there are many choice coaches out there that can help you create the budget tailored to your financial goals. There's also a lot of lending institutions as well, such as online mortgage companies, large banks, and local community banks. Working with a local community bank, you're working with a person in the same community where you live and have easier access to your lender with one-on-one service with one simple call or email, and even better, your money stays local in our community. Go ahead, Sam. And again, because I discussed our planning ahead and how planning ahead is very important. So reviewing your credit reports is one of the most important steps to make before applying for a mortgage, and in fact, of any kind of loan. There are 3 credit bureaus: TransUnion, Experian, and Equifax. You can pull a free credit report by going to annualcreditreport.com to obtain a free credit report once a year. If you do not have credit established, you're going to want to work on establishing credit. Credit reports contain a lot of information about your credit payment history with the trends of how you repay your credit and such. There are many things that affect your credit. For example, having too many credit inquiries pulled on your credit can really hurt your credit score. Therefore, it's really important to know what your credit score is and understand what impacts your credit score when thinking about obtaining a mortgage. You're going to want to begin saving money, and by creating a budget and start saving funds by putting money aside weekly, monthly, or whatever is easier for you. And the more money you have to put down on a mortgage, the better, which will be discussed later in the presentation. But you also know that you really want to make sure you make your monthly payments on time, your rent payments, your utilities, your insurance, and your telephone payments. Go ahead, Sam. So with working on, you're going to want to be pre-qualified or pre-approval. And so what's the difference with a pre-qualification and a pre-approval? A pre-qualification letter is when a lender obtains basic information from you and provides a general letter indicating the maximum amount you would likely qualify for. So that's the key word here, is likely. The information provided has not been fully reviewed by a lender. Your income and your debts have been reviewed based on what you gave, and you're given a rough mortgage amount that you can afford based on what you entered on your paperwork. Therefore, on a pre-qualification, or that's a pre-qualification, therefore on a pre-approval is when an application is reviewed by the lending institution with no specific property address. The lender will review the application to ensure the borrower and the financial information is completed. He or she will request copies of your financial income, such as pay stubs, your W-2s, or your tax returns. And they're going to review and ensure what income can be utilized. So for example, many people add bonus income on their application. However, in order to use bonus income, the borrower must have earned that bonus income for at least 2 years. So if the bonus income has not been consistent for at least 2 years, then that bonus income cannot be counted as income for you. As I mentioned earlier, knowing your credit report is extremely important as well. So after your lender reviews your information by speaking with you and verifying the information, they would then also be able to issue a letter to you stating what amount of money that the bank is willing to lend you. The letters are usually valid for a certain time frame. Every lending institution is different. However, Savings Bank of Walpole offers a time frame of 60 days. Now, while you might not find a property during this time frame, however, you're going to want to remain in communication with your lender for updated future pre-qualification letters. However, these times in our time frame here, the properties are moving very fast. So a letter is very important to have ready to go when you first meet with your realtor. You're going to want to note that letters may have conditions, and those conditions are going to be outlined on that letter. So please note, also, you're going to want to please note a pre-qualification and a pre-approval letter are not final loan commitments. Your information is subject to final review and acceptance by an underwriter. And many realtors will request and require a letter before working with a prospective buyer. Therefore, you're going to want to make sure that you allow enough time for a lender to review your information. Okay, moving on.
All right, thank you, Christine. We'll get used to this mute and unmute eventually. We only have a year under our belt. So moving on from getting pre-qualified and pre-approved, what are you getting pre-qualified and pre-approved for? So there's a lot of different loan options available. We have your run-of-the-mill conventional mortgage, which 9 times out of 10, when you're a first-time home buyer, you're looking at a 30-year fixed-rate mortgage that amortizes out like your auto loan would or an installment loan where you're paying a payment each month. Some will come off of the principal, some will be going towards the interest owed. So that's a great first start, but there are additional options out there that may make first-time homeownership more attainable. So these are offered through a lot of lenders, but here at Savings Bank of Walpole, we partner with New Hampshire Housing to offer their version of these products that come with a little bit of a bonus, if you ask me. So some of those products are FHA, rural development, their version of a conventional loan. So what makes theirs stand out from another lender's version of those is they offer a few things such as cash assistance. So if you were prepared to come with a down payment but didn't account for the $5,000 to $10,000 you'd be paying in closing costs, that can help bridge that gap. Or their rural development programs, 0% down and cash assistance as well. So that again makes it that much more attainable. And their private mortgage insurance premium is more affordable than we may be able to offer in-house. And we will touch base a little further on what private mortgage insurance means and why you need it further into the presentation. So those are a few additional loan options you have, but with those great bonuses does come a little bit of a catch. So for instance, your private mortgage insurance premium through FHA and rural development doesn't go away as it does with conventional. In a conventional loan, your private mortgage insurance premium drops off once you have adequate equity in the property. Whereas FHA and rural development, those never go away until one of the following happens, until you pay the mortgage off, sell the home, or refinance. So one of those has to occur to be able to get rid of your private mortgage insurance. Another added detail with those loans is the appraisals can sometimes be a little bit more skeptical on a property that may be seen as marketable in a conventional loan, for even though it has some peeling paint or what have you, may become a problem for an FHA and rural development loan, which in this market with such slim inventories, a lot of what's left on the market does need a little bit of love. So that may be problematic in one of those loan types. So those are just a few to know, and that's a very high level view of those products. So meeting with one of us post presentation next week or what have you, we can really dive into the nitty gritty of those offerings. Go ahead, Sam. All right, so in the discussions with your lender or whomever you're working with, maybe even your realtor, you may hear some of these following terms, the first one being a loan estimate. So a loan estimate is a form we are required to provide you as a lender within 3 business days of having a full application. So this form gives you an idea of what you would be held accountable for bringing to closing in terms of fees, what your product is, the interest rate, your payments, all those factors. A couple of things you will see on the loan estimate are New Hampshire property transfer tax. So there is a sales tax on purchasing a home. Customarily, that is split 50-50 between the buyer and the seller. So you will see that listed on there. You'll see an appraisal fee, an origination fee likely, which is the fee to obtain that loan through that particular lender. You may see what's called lender and borrower title insurance. That's a one-time insurance premium that protects you and the lender in the event of a title issue down the road. So we do have the title reviewed prior to closing, but human errors do occur. So there may be missed back taxes or maybe a boundary line disagreement. And what this insurance does is for the life you own the loan and the lender has a mortgage on that home, it protects you in those events. Whereas if back taxes are owed, they will pay it for you. If there's a disagreement, they will hire those to fight that agreement on your behalf. So it is a one-time, fairly reasonable premium. It is required for the lender, but it is optional for yourself. Some other fees you may see on the loan estimate are escrows. So escrowing means you are combining your homeowner's insurance payments and your taxes on the property into your mortgage payments. So in order for us to be able to afford that first tax bill coming up in July, we need to collect a little bit up front because we don't have enough mortgage payments between now and when that bill is due. So we collect it and put it in a savings account right up front. So some other supporting, I'm reading along in the slides here, some other common terms you may see are supporting documents. So we will request supporting documents when underwriting your file, when doing a pre-approval, and what those look like are your income documents. So a lot of times we're asking for your most recent W-2s and your most recent pay stub, the property tax bill and the subject property. For those who are self-employed, it'll look a little different. We'd be asking for 2 years tax returns if you've been in business for less than 5 years, a profit and loss statement, but those documents are catered to your situation specifically. So once your lender has an idea of your situation, they will coordinate with you what that supporting documentation looks like from you specifically. Go ahead, Sam. All right, so the application process itself, if you've already been pre-qualified, you've likely submitted close to a full application, so the first few bullet points wouldn't apply to you. But when it comes to initially getting started, you have a few options with many lenders on how to submit your application. For instance, you can do it online. You may be able to schedule a phone call to do the application over the phone. And though it's not as common this day and age, you may be able to have an in-person application as well. At which point the lender will be performing a credit check. Some lenders do charge for this. There may also be an application fee, so that is a good question to ask. Here at Savings Bank of Walpole, we do not have an application fee, and we will not charge you for your credit report unless you get to closing. Once you are under contract, on a home, you would provide us with a copy of that contract, and we would have that missing link between your pre-approval application and your full application, which is the address. So once we have that, we can move forward with your loan and collect the next step of the documents. So at this point, we are required to give you a loan estimate within 3 business days. And this is the loan estimate form that you can utilize to compare fees and products with other banks when making your decision on who to move forward with. Go ahead, Sam. So once you decide who to move forward with, you've compared the fees, the interest rates, the product terms, you will be able to proceed with the loan. And at which point we may request some additional documents. That might be the property tax bill if you haven't provided it yet. If we need updated pay stubs because the ones we have expired, this is the point where we would request those to make sure your file is buttoned up to be moved to underwriting. And we are required to make an underwriting decision within 30 business days. So within 30 days, you will know whether your loan was approved or denied. But if you have not provided the requested documentation for us to make an adequate decision, then you will receive a letter from us informing you within the 30 days that that was the case. So hopefully you are approved, and you would then receive a commitment letter that outlines that you were approved for the loan subject to X, Y, and Z being met. So those are called your conditions. Your conditions may be the appraisal. We might not have received that back yet, or We saw credit inquiries on your credit report, as Christine mentioned, where we saw you tried to obtain credit with another lender. We need to know why, and if you did obtain new credit, because we need to account for that new liability should you have received one. So a lot of those conditions are for you to complete, but on the next slide, you will see that some of those conditions the bank will obtain on your behalf. So go ahead, Sam. All right, so some of those conditions that the bank will obtain is the appraisal. We will order the appraisal through one of our approved companies. We will order the title search on the property through our rotation of approved title companies or local attorneys, and verifications of employment, which are required prior to closing, but sometimes we need more in-depth information from the employer about your income or your start dates and end dates. We will contact them directly. One condition we usually do not require is a home inspection. Though we certainly encourage you to consider one, we do not require it. The few times that we do require an inspection is if the appraisal comes back causing any concerns. So if the appraiser goes out and sees that the roof may be in ill repair or there's water damage, we would then request that someone with the proper credentials goes out and confirms the situation and whether that needs to be rectified prior to closing, or if we need to come up with a game plan on how to fix it post-closing. Sam. Go ahead.
So moving on to private mortgage insurance. So what is PMI? And Sarah touched a little bit on this topic. PMI is private mortgage insurance, and this type of insurance is required if you do not have 20% cash down to put down on the property. Now, thing to know, private mortgage insurance protects the lender. It does not, in the event that you stop making payments, it does not protect you. There are several ways to pay for private mortgage insurance. Some lenders offer more than one option. However, the most common is to pay for it monthly by adding the premium to your monthly mortgage payment. The credit score and the loan amount and the loan to value are factors with calculating your monthly private mortgage insurance and what it will cost. So therefore, it's another reason you want to know your credit score and you want to make sure that your score is good. This is a nice benefit to have for many customers, as it allows you to put down a smaller amount on your home of the dreams so you can move in and begin a happy family life. And as Sarah discussed about the loan estimate, you're going to see the cost of the monthly private mortgage insurance on your loan estimate. And when the balance reaches 78% loan to value based upon the original appraised value, the private mortgage insurance is going to automatically drop off. But not all mortgages have that loan feature, such as FHA and rural development loans, as Sarah discussed. You're going to want to discuss the type of mortgage that you're in with your lender and what they are offering you and what the criteria was and how much that monthly private mortgage insurance is. Go ahead, Sam. On interest rates and floating. So interest rates, floating and locking, there's a couple things that you can do with your interest rate. When you're submitting a mortgage application, you're able to float the interest rate or lock it and at their interest rate at that time. If you feel the interest rates are going to decrease based upon the market activity, you can float your rate. This does have a risk as interest rates can increase. So you're going to want to watch the mortgage rates daily or closely and be in communication with your lender. Or you can lock your rate and when you submit your application at that time. This is a guarantee that your loan will not change for a time frame. Each lending institution is different. Therefore, you're going to want to make sure you know how long your rate is going to be locked for. Locking your loan is beneficial because it's going to give you peace of mind that your interest rate's not going to increase. And if interest rates decrease during the time frame that your loan is already locked, you have one-time option to lower your interest rate. That is with Savings Bank of Walpole. Not all lending institutions offer this. So that's another benefit of staying local, but you would also want to communicate with your lender about doing this. So Samantha, you can move on to the next slide. So after you've met all your criteria, you've committed the lender has committed to you, offer your commitment letter. And it's critical that you provide the conditions outlined by the commitment letter to your lender as soon as possible. As Sarah discussed about that, it is critical to keep these documents up to date because many documents expire within 30 days. Therefore, if you delay too long, you're going to be required to provide more documents, such as pay stubs and bank statements. So if you go out a few weeks, then the underwriter is not going to clear your loan to close. And that's the best 3 words that realtors and lenders love to hear, the clear to close. So once we have that, this means your loan processor or the closing agent is going to be contacting you to set up a date and a time and a location to officially close on your loan and become a first-time home buyer. Most banks require you to bring a valid driver's license and a passport. And if you need, or a passport. And if you need to bring funds to the closing, a bank check should be provided. So you want to make sure that you have time before your closing date to get the funds from your bank and obtain a cashier's check before you go to your closing. That way you're all prepared. And at that point, hopefully, when you're all signed everything, you get those nice keys and you are on your way to being a first-time home buyer. So Sam, if we have any questions that popped up during the discussion. You're muted, Sam.
Again, mute here, mute there, it's fine. So at this time, we don't have any questions in the queue. So we'd like to thank you guys for your time, and hopefully you found this presentation helpful. If you'd like to schedule a meeting to go over your situation scenario or discuss pre-qualifications for you directly, please contact Jessica Weston. She is a residential lending assistant. She would be more than happy to schedule a time for you to discuss with either Sarah, Christine, or myself and give you guys a little bit more insight one-on-one. As a follow-up, we will be providing a recording or a link to this recording within the next day or two. So now we'll open up for general questions. You guys can unmute yourselves if you'd like to speak, or feel free to use the chat function again on that lower right-hand side.
And I'm sure if you have a question, there's a lot of others that are thinking the same thing. And again, we did a really high-level overlook of what this process looks like. So we would be happy to go into further detail now or at a different time. And while we wait for a couple of questions to come in, I did want to note one thing I failed to discuss on the loan estimate and about interest rates is one thing you want to keep an eye out for in a loan estimate is points. If you see the word points, that likely means you're paying for a lower interest rate. So you may be getting a lower interest rate at one entity than another, but the higher interest rate one is not requiring you to pay for a lower rate. So that's something to keep an eye out for.
So we do have a question. Is it possible to describe physician loans and if we offer them?
I could take that if Sarah would like me to. So on Savings Bank of Walpole currently does not offer physician loans. There are physician loans. What they are is where a loan to value would be higher, such as 95%, and the private mortgage insurance would be waived. That's one of the options. But currently, we do not offer those programs at this time. Did I answer that question for the customer?
It looks like it, yes.
Okay.
That was what she needed to know.
Good. Thank you so much.
You're welcome.
Hi, I have a
She
question.
didn't have problems with the mute button. Go ahead.
Do you offer just loans for houses or do you offer loans for mobile homes?
That's a great question. Do you want me to snag that, Christine?
You bet.
Sure. So we certainly do offer loans for mobile homes. They do have to be on their own land, so they cannot be in a park or a co-op, secured to the ground. So having some sort of foundation, whether it being a slab or a true basement underneath, and it does have to be 1986 or newer. So there are some credentials, but it's certainly something that is doable. And for the private mortgage insurance overlay, because private mortgage insurance companies also have to approve the loans that we give to them. They do require 5% down or more.
Okay, great. Thank you.
Welcome. No other questions?
Any other takers?
No one's interested in land loans or anything of that such, because Savings Bank of Walpole does offer land loans.
Sure, I'll go ahead and ask that question.
So we do offer land loans.
Yeah, what about land and construction loans? How do you go about working that out?
Wow, that's a great question, and that's an actually in-depth answer to that. As every construction loan is different. You know, if you're purchasing a kit home and delivering it in, or if you're having a stick build with a contractor doing the work. So I definitely advise you to set up an appointment to get into the nitty-gritty and talking with the lender. Savings Bank of Walpole does offer construction loans. You can, if you own the land outright, then we would structure the loan as a refinance with a new construction quotes and plans after we talk with you about it. If you do not own the land outright, then we would lump it into your construction loan, including the land purchase and as well as a construction. We offer a one-time construction loan close. So what it means is if you're looking for a 30-year fixed mortgage, you would have a 31-year term. The first year is interest only at the stated rate, which we offer a 30-year rate of 3.25 at 3.282 APR. But that rate would be fixed at 3.25 for the year, your interest only, and then after the year, and hopefully your construction is completed, your loan would convert to a principal and interest amortizing loan for the remaining 30 years. It's quite an extensive process, which if you are interested, you give us a call and we can send you a construction loan outline of what steps are required and what information is needed to move forward with it.
Okay,
Sure.
thanks.
I can touch base on land loans if you're not quite ready to construct. We do offer just purchasing a land while you're working on getting prepared for the construction portion. So we offer a few different variations of those. Whereas you could do 20% down, which is pretty rare for a land loan, 20% down, 20-year term, where the initial year is either fixed and then adjusting annually, or the rate would be fixed for the first 3 years on a slightly higher percentage and then adjusting annually from thereafter. So.
And another note on the construction loans, I just wanted to comment on, you know, with everything going on with COVID and the industry, pricing of materials is really high. So if you are looking to purchase land first, sometimes the sellers can't wait that long for the quotes and the builders to gather all that information, because it is a lengthy time process to gather your permits and the quotes and everything. So a lot of times people will purchase land first into the adjustable rate mortgage program that we offer, and then they turn around and refinance once they have all their construction documents completed, because it could take about 6 months to gather all that stuff.
Okay, so was it sorry.
No.
Was it Sarah that mentioned that it was 20% down on the land loan?
Yes, at least. Yes.
Okay, and you said that 20% is unusual, so normally it's higher?
Yeah, generally speaking, I think you're looking at 35% or more.
Yep.
Okay.
Yep.
Thanks.
You're welcome.
So would you guys
And there's no
recommend
prepayment
when
penalty.
somebody's
So
Sorry, Sam.
sorry.
That's okay. And so would you recommend when somebody is ready to start the pre-qualification process or even just look into it, they would go out to Savings Bank of Walpole and submit an application. Now, when they go to do that, would you recommend that prior to it, they go through and they pull their most recent bank statements, a pay stub, whether or not they have investment accounts. So as they're entering in the information, they can answer those questions quick and easy? Or do you think that they should wait till after they speak with you to do that?
Is this in regards to a construction loan?
Nope, just in general, just in general. So somebody that's ready to look into it a little bit further, would you recommend that they pull those type of documents first so that they have the idea in their mind when they're entering in that information and ready to speak with you?
I can, absolutely. So the more information you have handy, if you're calling, you want to just run some scenarios, you're going to want to have the most recent mortgage statement in front of you to find out what the balance is currently, find out, if there's any, what the interest rate is. So we as a lender can compare and explain to you, the overall year-to-date interest you're paying right now, and what, by refinancing, what your overall year-to-date interest will be, and how it can save you money. So you're really looking at and comparing apples to apples. If you don't have it and they're thinking, you really can't compare accurately. It's just a roundabout. And also, if they have their pay stubs handy, then we can be able to calculate their income correctly. And we also, having a tax bill, they're going to want to know what their exact tax bill is instead of just averaging it and rounding it. You don't round it. And also, with having the pay stubs, we will look at gross income, and most people think it's off the net income. We use gross for qualifying. That answered the question.
Yep, you dabbled in some refinance stuff, but that's okay. Again, just generalities of if somebody's going to apply, these are the type of documents that you're going to need to submit to us. So it makes sense to have them handy when you're entering in the information rather than having to go back and gather them later or feel flustered in the process. So.
Right. It's always when you apply for an application for a pre-qualification, you want to have that information handy because the lender we will be following up with you within 24 to 48 hours. We'll be contacting you if you applied online, with an email or a phone call. We'll start with the email first as you applied. That way, if we do not hear from you, then we'll pick up the phone and give you a call. So that way, if you have it handy, we're going to ask you to provide copies of it, and you can scan it into our online Encompass portal program when you apply online. So you're going to want to have that handy right away. And that way, if you don't have it handy right away, you're going to delay the pre-qualification process. And as I mentioned earlier, the houses are moving very fast, and realtors are going to want you to, if they're going to show you that property, you're going to want to make an appointment right away, and therefore you're going to want that letter immediately. So if you're applying online, have your information handy, right, and ready with you. How's the questions going?
Right.
Anybody else?
Any further questions? I don't see anything in the queue. All right, Sarah, Christine, any other tips, tricks, tidbits that you want to impart?
As Sarah alluded to, I think we did a very high overview on the becoming a first-time home buyer or the process of applying. I encourage everybody to, if you want to start the process, you can contact Jessica Weston, or go to walpolebank.com and click on the Mortgage Center, and you will see there's home loan options. And you'll see our contact information. You can click on our information, send us an email, or give us a call, and we'll be gladly to talk privately one-on-one with you about helping you with credit, giving you some tips and products of what works for you, and or helping you get pre-qualified for your home of your dreams.
Yeah, and if you're not quite ready for submitting a full application, we can just start the discussion and figure out what direction may work best for you. We can just run some basic numbers based off of the information you provide us and see, are we even in a position to get you into the ballpark of where you're trying to be in terms of buying a home, whether the 125 to 175 or 175 to 250 range. We can run some of those numbers for you to see, does it make sense to move forward right now, or should we take a little time, save a little bit more, pay some things down? We can have all those preliminary discussions before hitting your credit and submitting the application.